Hello, my name is Tolope Oki, and this is the investment project for Business 538, Chapter 22, Implementation and Application Project. The agenda we have first is planning. Here we'll cover the investor objectives, constraints, investment policy statement. Second, it will be the execution. Here we'll talk about the security selection strategy and asset allocation, capital market anticipations, and implementation and execution. Third will be the feedback. Here we'll cover monitoring, rebalancing, and performance evaluation. Last will be the references. Here I will offer the references that I used in my research. Planning. Investor objectives. The risk tolerance that I chose is aggressive for now. As I get older, things might change. Human capital. One of the reasons that I went to graduate school, because I believe it was an investment in myself. In graduate school, one can increase their earning power as well as enhance their skills as well as learn new ones. Wealth creation. My choice is to invest in high growth mutual funds. And then when I have additional income and earning power, then we could decipher the differences. Retirement planning. Through my employer, I will utilize the defined benefit plan. Here, pension payments are calculated by the length of service and the salary that is earned at retirement. Not much effort would be needed on my part. Client advisor objective constraints. Liquidity. Even though there isn't a need for any short-term funds, I am aware that unnecessary and unscheduled withdrawals do not work in my favor. If funds are needed on a short-term basis, then we can reevaluate the strategy and go from there. Investment horizon. 15 years expiring at 12/18/2036. The investment horizon of 15 years was chosen because the more time, the better. It can help with losses. It can be balanced out. The losses can be balanced out with possible gains, and the portfolio will have more time to bounce back. The longer the period, the more time it has to bounce back. Regulations. Under the prudent investor rule, I, the financial advisor, have the responsibility to restrict investment assets that would have been approved by a prudent investor. Because the law lacks specifics on interpretation, this may be required and differ in the court of law. ERISA. ERISA plays a factor in the pension plan that's through my employer. Also, I must pay attention and I must remember that my interest in mutual fund causes me to make sure that I cannot hold more than 5% of shares in any publicly traded corporation. Taxes. It does have an effect on returns because taxes are deducted from returns that are distributed. Tax sheltering and deferral strategies to limit the obligation and maximize returns will work in my favor. Investment policy statement. Executive summary. The client's name is Tolope. She is an individual investor. Her age is 31. She lives in the state of North Carolina, and her approximate value of assets is $500,000. The investment policy statement. A brief description is that Tolope is currently in school attempting to get a master's degree. Her plan is to choose a new career path that will pull her deeper into the accounting field with the salary increase to help her become debt-free. I do not have children yet, but I want to begin saving for their college funds immediately. With additional student loans coming my way in the near future, I am developing this report to discuss and analyze my own investment management process and develop my own investment policy statement with regards to wealth creation and retirement planning. Investment policy statement continued. Purpose. This investment policy statement is for the financial advisor, Tolope Oki, me, to come up with a clear plan on how to maintain and increase income while working to decrease debt. Guidelines and investment responsibilities, income generation. The Motley Fool article that I found speaks about some income generation techniques. Cheap dividend stocks will be one cost-efficient way to give someone the opportunity to benefit from steady income. 3 dividends that has gotten positive evaluations in 2020 are Cardinal Health, AT&T, and Bank of America. Cardinal Health, even with the COVID-19, it's been fairly stable. One would have to keep up with the opioid lawsuit that's coming within the few months, but it doesn't seem like a problem now. AT&T, a telecom industry. Telecom industries tend to do pretty well in markets, and AT&T also has some new expansion and growth strategies. They're implementing HBO Max and the 5G wireless networks. This will generate additional revenue that will also maximize returns. Bank of America. Even though the 2020 first quarter was a little disappointing and it declined 45% from 2019's fourth quarter, analysts believe that they are trying to find ways to minimize their losses, and they're also mimicking the behavior that they conducted during the Great Depression. Because of the behavior that they mimicked during the Great Depression, during those times they were able to come back pretty quickly, and they understood what needed to be done in order to get back on track. With tax positioning, I will take previously filed tax returns to measure current or deferred income taxes and liabilities. Investment styles. Here we have passive management investment styles, active management investment styles, and we can combine both. Under passive management, security prices will usually be fair depending on the risk level, and I will not have to spend a lot of effort or time trying to beat the market with mispriced securities. Under active management, I would have to outguess other investors having to do with the securities, and I need to figure out which ones are going to outperform in the future. Security analysts and portfolio managers will be needed for this procedure. Security analysts, they provide a specialty in particular or specific markets, and they can provide assessments based on their research. Portfolio managers can take those assessments and make asset allocation decisions based on the market forecast and the asset allocation, as well as the assessments that are provided by the security analyst. My decision was to use both the passive and active management. And the text is described as passive core, but according to Polyak, she calls it core and explore. This is a technique used to combine a passive and active management style in order to maximize cost, in order to stay away from tax liabilities, and hedge against risk that may come with specific styles of management. Asset allocation. The profile for the candidate, she's 31, her current assets is $500,000, and her return goal is between 1 to 6%. With the asset allocation, the distribution is as follows. Stocks is 50%, non-US stocks is 15%, fixed income securities will be 15%, and money market assets, cash equivalents, will be 20%. Execution. See, this is the security selection strategy and the asset location. Here we discuss exactly how we're going to distribute, how we're going to diversify our portfolio. Stocks being 50%, the 3 that we chose is the same from slide 9 for the income generation article that we saw, Motley Fool. We're going to do 16.67% for Cardinal Health. We're going to do AT&T 16.66%, and then we're going to do Bank of America for 16.67%. For the non-US stocks, which we discussed in the slide prior, it was 15%, we're going to choose Cornerstone Insurance. This is a Nigerian-based insurance company, and we're going to do it at 7.5%. We're going to choose a bank, That's in Nigeria as well. An Access Bank at 7.5%. We choose non-US stocks because you don't want to place too much faith in foreign stocks due to the unpredictability in some African countries. Fixed income securities being 15%. We're going to do treasury bonds of 7.5% and Vanguard short-term tax-exempt bonds for 7.5%. The short-term tax-exempt bonds under Vanguard, the tax-exempt status is going to help us save some funds. The short-term aspect of it will give us access to funds quicker. And then they also discuss the interest rate being a little less, which also hedges against risk. Any risk that we can get away from is going to be very beneficial to our portfolio. Lastly, it'll be money market assets or cash equivalents at 20%. We will put all the 20% in those treasury bills. Capital market anticipations. COVID-19 has had an effect on stocks, bonds, and treasury bills the past couple of months. In the next few slides, I will specify how they have been behaving since businesses and states are slowly opening back up. According to Baldwin, expectations are higher for stocks than bonds. Young investors should invest in stocks, especially with the ones that's matured in the year 2059. And with the current earning yield of 5.4, they can weather 50% of crashes that interrupt the market today. Bonds. Bonds rates of return usually include inflation, and Vanguard market bonds are government guaranteed. Treasury bills. They have different kind of treasury bills. They have some that are inflation protected and they do have regular ones. For example, a 20-year treasury bill that pays nominal dollars may yield 2.9%. The 20-year inflation protected treasury yield bond will probably yield a little bit over 1%. That 1.9 spread between the two is what is used to access future inflation. Here is a chart provided by Baldwin. He is trying to inform us of what he expects the Vanguard market to do and how he thinks that they'll behave. The yield for example, federal money market is 2.3, and the expected rate of return, real return, is going to be 0.6%. As you can see, he has listed out the high yield corporate bonds, the total bond market, and the total stock market for 6.7, 3.3, and 2.1 in the yields, respectively. Implementation and execution. Step 1, I will open an account and deposit the funds I wish to invest. Step 2, asset allocation will take place. Step 3, execution will be noted and dated. Step 4, monitoring techniques will be noted and dated as well. Feedback, monitoring. I will continually track my account and life changes for the following reasons: new births, marriage, deaths, shrinking time horizon, new goals, income changes, risk tolerance, and regulations. After the objectives and the constraints, as well as the security analysis is conducted, investments in their performances must be monitored just in case new strategies and new goals have to be implemented. Rebalancing. Rebalancing is the process of buying or selling portions of your portfolio. Think of it as tuning up your car or rotating your tires. The plan is to sell portions of my portfolio until the future looks bleak, just in case, things might happen or risks might increase. And stocks that are at a point that cannot come back, I will go ahead and sell. Then we could buy additional securities to replace the ones that we sold and reflect any changes in goals or irregularities or even the new life changes that may occur. The importance of rebalancing can be illustrated in the mock portfolio set in front of you. He started off, or she started off, with a total of 100,000 in the opening balance. After rebalancing took place, they ended up with 12,900 as their closing balance. Performance evaluation. I'll discuss changes in allocation with my pension fund manager at my place of employment to see if I'm satisfied with the way things are going. Due to the investment horizon and risk preference, I can afford risk even though it's not obligated. Please see the references